Welcome to CRE Fast 5. I'm Carly Iacono, and tonight I am giving you 8 key takeaways from the International Council of Shopping Centers National Convention, which was held this week, virtually, of course. ICSC strives to bring members from all parts of the retail industry together and is an excellent resource for thought-provoking ideas on what will affect the industry into 2021 and well beyond. Let's jump in. Number 1 is retailers are going to be focused on controlling their supply chain. 2020 taught us a lot about supply chain management, and as we've seen, many items have been out of stock. So the focus will be on predictable inventory. So to do this, I expect retailers will be really putting a lot of effort into strengthening their vendor relationships and having multiple sources of production if possible. The second thing is the product mix will continue to be streamlined. Just because a lot of retailers are becoming more and more omni-channel and are no longer constrained by shelf space does not mean that the SKUs really should go through the roof. So I think when people first or companies first start going into the online business, that's the thought. Great, we can offer an unlimited product assortment, but that's not always the most profitable way to look at the business. So I expect that we're going to see more and more streamlined product mixes. Now, to make that effective, data becomes even more important, because if you have a very tight product mix, but those products don't happen to be anything that the consumers actually want, you're really in big trouble. So relying on data for lots of reasons, but this in particular will be a very important piece of the puzzle. The fourth thing I want to highlight are these digital trends. So by most estimations, we have advanced 3 to 5 years in terms of our technological initiatives in less than 12 months. Phenomenal. Now that pace might slow down a little bit, but the expectation for improvement and growth is going to be consistent. Most things, if implemented on their own, could take up to 10 years. So if you are a retailer and you're trying to implement these fast-changing digital trends, it makes a lot more sense to partner with a company that already has that technology, which brings me to the next point, which is we will see increased mergers and acquisitions. So if you can't build something, if the timeline is too long, maybe it's 10 years to get up and running and really understand this new technology, you have to buy it, because first in has a lot of benefits. So retailers can't wait. Because of that, we're going to see products, we're going to see individual lines being acquired, and then we're going to see just major acquisitions of technology pieces that would take the retailer too long to create themselves. Perfect example of this is the potential Walmart TikTok partnership that I mentioned a few weeks ago. Next thing I want to talk about is the stickiness of certain trends. Some things are directly correlated to the pandemic and may or may not be here long term. Some things will be permanent shifts in consumer behaviors. So again, understanding which is every retailer's focus right now. And relying on data is going to be tremendously helpful for the national brands that have access to it. But where we go next is going to be a big focus. So let me give you a perfect example of stickiness. The Container Store had an absolute fantastic year, because a lot of their core competencies were in demand due to the pandemic. People were cooking more, so their kitchen segment did really well. People were spending more time with their family in home offices, so that part of their market did well too. And organization demand went off the charts. A lot of people look to organization as a way to control something in their life. So once the pandemic opens back up and we are out and about, that intensity might wane, but I think there will be permanent shifts to consumer behaviors. So the boost that we saw to some of those product categories will likely continue. And again, every retailer is trying to judge what's here to stay and what's not. Next thing I want to touch on is the rise of percentage rent. Also mentioned this in previous videos. retailers are demanding, in a lot of cases, a percentage rent instead of a fixed rent lease structure. Now, from the landlord perspective, it becomes very difficult to define what a sale is. So is a sale someone ordering something online from the same zip code that that local store is in? Is a sale someone walking in and purchasing at that exact location? How do you handle returns? Does it decrease the bottom line for that specific location, or is that just attributed overall to the national brand? How do you separate the two? So there's a lot of debate right now on how we define sales and what percentage rent should look like and how it should be measured. So if you are a landlord considering a percentage rent lease, make sure you're very comfortable with the definition of how that will be calculated. Last thing I want to touch on is redevelopment. I heard a great line today that retail is under demolished in the United States, which is an interesting way to look at it. So we are over retailed, meaning we have more retail per square foot per person than any other country in the world. But thinking of it the other way, that's under demolished, is kind of a twist on that. So moving forward, every retail center will not be able to be reimagined in the way that we might hope. There will be some that have permanent vacancies. There will be some that are just very, very difficult to reposition. Some will go to industrial if possible. Some will go to medical net lease. Some will go to mixed use, and some will stay retail and just have fresh, vibrant new businesses. But every shopping center is not necessarily going to have that next life as a new and improved center. So we're going to have to get very creative moving forward. And I would say anything that you are thinking about or looking at from a development perspective, from an investment perspective, is exceptionally asset specific. So no longer is it tenants out, here's the new market rent, done, boom, here's the TI, we're good. It's going to take a lot more work to reimagine that center. If any of these concepts are something you want to talk about further, feel free to give me a call. I'm happy to walk you through. That was CRE Fast 5. I'm Carly Iacono. I look forward to seeing you again soon.